Good morning. How you doing? This is the 0DTE Morning Market Analysis, and I'm Coach Ernie, and it is Wednesday, April 10th. I don't know why I have to keep on looking at the date. I know what the date is. Got to keep on doing it. But in any event, today the topic is still all on tariffs. I'm not going to go into great detail unless you've been hiding under a rock. You know that President Trump has put a 90-day pause on tariffs, or on the extreme application of tariffs. He has left 10% across the board, and because China did not capitulate, in other words, did not see it his way, and kind of retaliated, he put a 125% tariff on China. Now, he thinks that will help bring them to the negotiating table. They need a little help getting over their ego and that sort of thing. And finally, that will get worked out. But we'll see. In the meantime, that's still going to keep volatility extremely elevated, although it came down like a rock yesterday when the market just took off. One of the biggest rises in the market for, I think, in the past decade at least. And so also in... speechless. Because normally I'm thinking, okay, what are we going to talk about? Obviously we have to talk about the play of the day and what that's causing. I mean, obviously the VIX is still elevated. That's causing an extreme decay or delay in the decay rate of premium, which is all good for us. That means that we can put on positions that have greater potential, less risk, lower gamma, less sensitivity to price. All that is great. When we're in this extreme volatility range, though, this chaos moment, you don't know what's going to happen. And this morning we have some very impactful economic reports. Will they get totally overshadowed by the tariff cloud? I don't know, but it's the CPI and unemployment. I mean, typically those are things that really move the needle. But with the tariffs on everybody's mind, it's like, And plus we have a 30-year bond auction, which is another really impactful thing. So it's a little bit confusing. I mean, not from a trader's point of view, but just trying to get a handle on what's important, what's more important. From our point of view, though, our playbook is very clear. When we're in this volatility regime, which we call chaos, as you may already know if you watch this program, we have three levels of volatility regime. We have Zombieland, which is the VIX below 17. We have Goldilocks when it's between 17 and 32, and anything above 32, we call that chaos. And then our entire playbook in terms of the type of trades, how we set up our trades, how much exposure we have to that opportunity, is all determined by that level of volatility. We have our main primary trade, which is the out-of-the-money butterfly with extreme risk. Typically, we take 10% debit, or 10% of the width as the debit, which results in a 1-to-9 risk-to-reward ratio. We typically go anywhere from 1-to-7 to 1-to-12. We find a sweet spot somewhere in there. And we do that so that we can control our drawdowns and the volatility of returns and maximize our return on capital put to work. So that's our strategy in a nutshell. But we have edge cases. Edge cases when we have extreme low volatility, which is definitely not the case right now, or extreme high volatility, which is right in that wheelhouse. And for the past several days, we've been talking about nothing but the Batman, which instead of a single out-of-the-money fly, it's two out-of-the-money flies, one above the market, one below the market. And a lot of people mistake this for a market-neutral trade. No, it's a trade where we have no friggin' idea which way the market's going to go. Because typically what we'll do is we'll create a directional bias and say, okay, we're going this way, we're going that way. I really don't know. Anything can set this market ablaze. And it could zoom up or zoom down. So it's anybody's guess. In that type of environment, the Batman starts becoming a much needed edge case strategy. The thing is, when you put a excuse me, I don't have the cough button nearby. When you put the Batman on, it creates a dilemma. Sure, you want to put an out-of-the-money trade up here and an out-of-the-money trade over here. And let's say my thumb is the debit, right? But when you put two of them on, and the risk to reward is really determined by the ratio of the width of my thumb and the tips of my fingers. When you put two of them on, you have to add the debit, but the height or the potential of that strategy doesn't get heightened. It gets diminished. So now the width or the height or potential of that trade versus the debit has a completely different character. It's the risk to reward is much less. Instead of that 1 to 7 to 1 to 10, 1 to 12, now we're talking about maybe a 1 to 4, and that's not what we want. So what you have to do with the Batman is you push it way, way out, and the further you push out a fly, an out-of-the-money fly, further out of the money, the cheaper the debit gets. And so you keep on pushing it out until the debit and the risk to reward now, or the total debit, is so cheap that it now comes in line with what our normal single out-of-the-money butterfly is. So that's what you do with the butterfly. And a lot of people will get really confused with this. They'll say, man, you push that thing so far out, price is never going to reach it. And that's where you would be wrong. Au contraire, monsieur. I don't even know French, so I just blurted that one out. But you'd be surprised just how much the market can move. Actually, if you've been living through the market for the past few days, you wouldn't be that surprised. And in any event, we're not necessarily trying to get inside the tent of the butterfly. What we're really trying to do is take advantage of any move towards the butterfly and ride that profit and loss curve there. And if we get into the tent, that's a bonus. But that's only about a 12% chance. Now, I guess that we're going in both directions. It's actually closer to about a 20-25% chance. So still pretty good odds if you get in the butterfly. It's a big win. But most of our trades actually happen outside the profit tent. And so the Batman is, and in some cases with the Batman, you might win on both sides of the trade. So we often have whipsaw in these type of cases where it moves sharply down, then sharply up. But the majority of times it will just choose a direction. And of course we're putting on the Batman because we don't know. We just don't know. So that's what we're doing. So instead of me blabbering on, let me show you our playbook so you can see that in action. So this is the VIX, and then we lay our playbook on top of it because that makes sense. You can see that the volatility is super high right now at 36.64, although not quite as high as it has been in the past few days. And it's come down significantly, but still extremely high by our standards. And so you can see all of these different trades, the classic fly, the time warp or the multi-day fly, and the Batman are all, their parameters are based on where volatility is. And so with the Batman, you can see, we're just doing the out of the money fly, out of the money. And then we come up here and we say, maybe 30% of the time we do the Batman, maybe 60% here, up here, 90%. We're in the 90% range. And for a period of time, I would say we were deep into the 100% range, or the number of times that we would consider putting the Batman on. So we are definitely putting a Batman on today. This is another edge case trade that we would normally take in the morning called the big ass fly. And we often look at that also in the morning, although we haven't looked at it for the past few days because this is really to determine which end of the range on the classic out of the money fly that we're going to take. Are we going to be on the low side of the range or the high side of the range? And we do that by looking at what the debit is of a 50 wide fly in the morning before economic reports. This trade here is really designed to take advantage of impactful economic reports like this morning, right? So let's take a look at economic reports. And this is what we would normally do, but are we going to take a big ass fly this morning with volatility this high? It doesn't really seem like a good risk, although the risk is down. So let's take a look at that. And so I need to go to, where is it? Safari. All right. So, like I said, this morning we have core CPI, key inflation indicator, month over month, and core month over month and year over year. This is huge. And unemployment claims all coming out at 8:30. Normally, those are things that would really move the market. I'm wondering if investors and traders are going to be really paying attention all that much. More, probably watching the news wires to see if President Trump utters something that could cause the market to go zooming up or zooming down. And then later today, we have the 30-year bond auction, which is really in line with the CPI in terms of the read that you get on inflation, because the bond auction and, treasuries are all about interest rates, right? So that, and that affects the Fed's disposition and where the Fed is. Of course, the Fed seems to be behind the times here. Their overnight rate is so friggin' high, and it's even higher than the 2-year Treasury, which is kind of weird that an overnight rate would be higher than that. And so they're just behind. They're like I don't know, ostrich head stuck in the sand kind of thing. They don't want to deal with all of this tariff stuff. It's just too difficult for the 400 PhD level economists that are on staff there to figure out. We need more clarity, they say. Now, they gave them clarity yesterday, and yet they're still, really hiding. So that's all very interesting. If you want to know more about FOMC and what they're actually thinking, I monitor them on a daily basis, everything that they say. And let me show you that. That's kind of interesting. So if we go to my X account, I have an X account called FOMC Alerts. And that's this guy right here. It's got almost 33,000 followers. And what I do is I follow every single move that anybody on the Fed makes. And as soon as it happens, I grab it, scrape it off the internet, and then put it here as a post. And so you can see the last one that came out was just an hour ago, 4 hours ago. So every day, all day, 24 hours a day, we are looking at what the Fed's doing. So if you want to keep up on that sort of thing, if it's important to you, go to X and subscribe to FOMC Alerts and join the other almost 33,000 people that are following that. All right. Well, while I'm here, let's take a look at something else that I think that you'll find impactful. And I think I need to go over to here and here. And that is my my Zero DTE Academy. Hang out here and find out all about our strategy. Learn about the strategy, the process, the methods. There's incredible resources here. Plus, on the calendar every week, we have 2 live coaching calls, Mondays and Fridays. In the classroom, we have complete course and clips right from our coaching sessions, mental toughness programs, a Trader's Vault that has all kinds of tools and log sheets and journals and all of that, all for just $35 a month. And the Foundations is a full-fledged course teaching everything about our strategy, including our Trader's Manual. So that's an incredible value. You should check that out. I just created this at the end of the year, or the beginning of the year, and we already have about 300 and something. Let's see, how many people do we have? 319 members right now, and it's growing. Check it out. I think you'll enjoy it a great deal. It's the best value out there. If you want to learn how to do zero DTE trading, this is the place to go. Yeah, why am I doing all this? Why am I plugging everything? Because To tell you the truth, you just have to sit back and just watch the market these days. It's just absolutely crazy. So I'm going to go back to my charts. And with volatility up in this range, Lord knows what's going to happen today. Let's take a look just for prosperity's sake. Directional bias. I would say, yeah, maybe it's bullish now because we're above the moving average. Okay. But the whipsaw has been incredible. I mean, look at this move yesterday. Unfriggin' believable. We went from 48.73 as high as 55. I mean, that's 700 points. 700 points. It's unbelievable on the S&P. It's just a monumental move. And we've already moved in the aftermarket, 5,500 down to, over 110 points. Even more when you consider the wicks. So, yeah, the whipsaw is just going to be absolutely off the chart. If we were doing out of the money flies, we're typically looking for interaction with our volume profile structural levels. See, this is what I normally do when I'm doing a market analysis. But when we're in chaos zone, it's all bets are off for this sort of stuff because it's just chaos, right? So the only way we can handle it is by sort of punting and putting on the Batman above and below the market. So what we would normally do is if we're bullish, we're looking for a pullback into one of these levels. But who knows where it's going to go? It's just crazy. Now, could we have predicted that the market was going to take off like that yesterday? No, because we were still in a bearish mood. Bearish obviously would have not been the play yesterday. So then we got our volume profile. Now this is this will bring us a little bit down more to reality. You can see this extreme volume well, this very low area volume right here. And it seems that we're playing on that right now too. This very low level here should provide support to the market here. So I expect to find support there. I mean, it's possible that we might come down here because if you look at it from the SPX point of view, it's going to show a huge gap. Let's see, we need to get to a daily chart because it's not going to show the day yet, right? Wow, I'm all over the place here. So here we are here. Is it going to show the gap? Are we going to be up here somewhere? I think we are. So we don't see the day yet. So let's go back to here. So as I said, I think that we're going to see strong support at about the 5,400 mark, right around there. And move up into this next node. And potentially consolidate in this area because we do have a fairly well-formed node here. It's kind of bifurcated. And then the market's going to decide what to do there. Get more information from the Trump administration on tariffs. See how the whole China thing's going to play out. That's a big question. And are some China-sensitive stocks going to see some whipsaw? How are they going to be treated in this whole game too? Is this going to actually start a trading war, or will China sort of come to their senses and decide to play with President Trump and figure out how they're going to swallow their pride and stop being bad actors in the global trading game? And that's really what this is all about, by the way. It's really the whole world now against China. At least that's what it appears to be, since the rest of the world capitulated to Trump's demands and to sort of level the playing field when it comes to tariffs. We'll see how that all works out. Purportedly, more than 75 countries called up the administration yesterday wanting to make a deal. Everyone except for China, who, instead of wanting to make a deal, decided to put on retaliatory tariffs. So I don't see how they have a leg to stand on. Our leverage over them is huge. So we'll see. I don't know. Does this result in just a financial conflict, or could it be something more? That's I don't really want to think about that, but that's going to keep volatility high for a while. Man, I told you guys about this at the beginning of the year. This year, 2025, was going to be Tariff City, Volatility City, which was great for us. Chaos zone and volatility way up here is very interesting. And it's, from our point of view, it's not nerve-wracking because we're taking such small risk that any one day is just another data point from our point of view, and it could potentially be huge returns. But it's definitely not as deterministic as, say, trading when we're in the Goldilocks zone. That's where we're really cooking. Here, it's just, what's it going to be today? You got to flip a coin. It's fun, though. It's a lot of fun. We still make good money. We're still consistent. The Batman helps us become consistent in this area of chaos. We're never in trouble. We're always cool, calm, collected because that risk is always small and the potential is always big. All right. That's about all I have to say. I think I've drone on a little bit too long. I need to get back to the coaching clients. And thank you all for joining me. We'll see you next time. Coach Ernie out.